Welcome back to XRP Insights. For years, the biggest question around XRP hasn't been the technology. It's been whether Ripple could ever fully operate inside the U.S. financial system instead of on the outside of it. But over the last few weeks, that question has started to shift. According to reporting from CNBC, TradingView via Coinpedia, Coinpaper, and U.Today, Ripple isn't just navigating crypto regulation anymore. It's actively positioning itself to take on traditional finance. Today, we're going to break down what's happening, what Ripple's leadership has actually said about this strategy, and what it could realistically mean for XRP, without hype and without speculation. If you value calm, clear breakdowns like this, feel free to like the video and subscribe. Let's start with what CNBC revealed. In a recent interview and feature, CNBC reported that Ripple believes it has essentially conquered crypto and is now setting its sights on traditional finance. Ripple CEO Brad Garlinghouse explained that the company's next phase isn't about disrupting banks from the outside. It's about building crypto-enabled solutions that plug directly into existing financial systems. CNBC also highlighted Ripple's aggressive push into traditional finance through multi-billion-dollar acquisitions, including prime brokerage and treasury management firms, tools typically used by institutional players, not crypto startups. This context is critical because it explains why Ripple is pursuing a U.S. bank charter in the first place. Now layer in the regulatory side. According to TradingView and Coinpedia, the U.S. Office of the Comptroller of the Currency, the OCC, recently updated guidance allowing federally regulated banks to conduct riskless principal crypto transactions. In simple terms, banks can now buy and sell crypto on behalf of clients without taking market risk themselves. This is a meaningful shift. It creates a regulated on-ramp for crypto inside the banking system, exactly the type of environment Ripple has been preparing for. Brad Garlinghouse has consistently said that crypto's future depends on regulation, not avoidance, and these new rules move the system closer to that vision. Now let's connect the dots. According to U.Today, Ripple has officially applied for a U.S. national bank charter with the OCC. This has been confirmed since mid-2025 and is now gaining renewed attention because of these regulatory shifts. If approved, Ripple wouldn't just be a crypto company. It would become a federally regulated financial institution, able to offer regulated custody, interact directly with U.S. banking infrastructure, manage stablecoin operations under federal oversight, and serve institutional clients in a compliant way. This aligns perfectly with what CNBC described as Ripple's long-term strategy, moving from crypto rails into core financial plumbing. This isn't a sudden pivot. Brad Garlinghouse has repeatedly said that Ripple's mission was never about short-term speculation. It was about building real financial infrastructure that institutions can trust. He's emphasized that XRP is designed as a bridge asset, a tool for moving value efficiently between systems, and that institutions will only adopt that kind of tool when regulation, liquidity, and trust are in place. That's why Ripple chose engagement over confrontation and compliance over shortcuts. And if Ripple becomes a regulated bank, XRP's utility narrative becomes far easier for institutions to justify. According to Coinpaper, some analysts are now describing Ripple's bank charter approval as potentially imminent. That doesn't mean guaranteed, but it does suggest the process is well underway. At the same time, XRP has been holding key price levels while much of the market remains cautious. That kind of behavior often reflects positioning, not excitement. If you track longer-term structure, this is where tools like TradingView help, zooming out, watching support zones, and ignoring short-term noise. Check out our link in the description below. So what should long-term XRP holders focus on here? First, regulation matters more than rumors. Second, infrastructure developments matter more than headlines. And third, security matters. If XRP is moving toward deeper institutional relevance, self-custody becomes increasingly important. Hardware wallets like Ledger remain one of the safest ways to store assets long-term. We also have a link for this in the description. And for those actively trading or managing liquidity, platforms like Binance continue to offer deep XRP markets, which becomes critical during periods of volatility. So here's the bottom line. According to CNBC, Ripple is actively moving beyond crypto and into traditional finance. According to TradingView, Coinpedia, Coinpaper, and U.Today, regulatory changes in Ripple's bank charter application are pushing that strategy closer to reality. And according to Brad Garlinghouse himself, this has always been the plan. Build inside the system, not outside it. This isn't hype, it's structural change. If you found this breakdown helpful, don't forget to like the video and subscribe for future updates. Thanks for watching. This video is for informational purposes only and does not constitute financial advice. Cryptocurrency investments carry risk. Always do your own research before making investment decisions. I'll see you in the next one.